Ladies and gentlemen, we need to talk about what just happened in the markets today, because something absolutely huge just happened and the US dollar just broke. I've been watching the DXY for about the past 6 months and it's only fallen lower and lower and lower. And this is the real reason why the markets are melting up. Because what you have to know is, yes, the stock market is going up in dollar terms, but that's because the dollar is going down, and more specifically, the DXY. So in today's video, we're going to go over the huge reason why this is happening. Should you buy now? Is this the market rally that we've all been waiting for? Is it going to go higher, or is it all going to go back down lower? So first things first, what we need to talk about is what happened with the producer prices index. So as long as the CPI came down, also the producer price index came down as well. And that's something the markets really liked. Now, on this report, something happened with the DXY. I've got my laptop here in front of me. The DXY broke a huge critical level. The DXY broke 100, okay? So it's now, as of recording this, it's 99.7. Now, about 6 months ago or a year ago, the DXY was around 114, 115. So it has fallen 15%. This is why we're seeing the markets rally, because the US dollar is tanking. Now, also something we have to talk about is, unlike the Federal Reserve is saying, they are still bailing out the markets through their Fed bank bailout facility, okay? They're still pumping $100 billion to the banks every single day, okay? They're still giving the banks money. And also their QT, they were meant to be selling assets, because what made the markets go up in 2020 and 2021 was they were buying assets. But then they said, don't worry guys, because inflation's so bad, we're going to start selling assets. Well, I've got the charts in front of me. The Fed only sold $2 billion worth of assets last week, which if you do a quick math, that doesn't add up to the $80 billion that they're meant to be doing. Also, we're seeing a lot of outflows from money market funds right now into stocks. I've got some other charts here. We're seeing QT, like I said, is falling. The Fed bank term funding facility hit another record high of 102.3 billion. So again, everyone, we are being lied to. Okay, the Federal Reserve is not doing QT. They're still pumping the markets like crazy. The US dollar is losing huge amounts of value, and that's why the markets are melting up right now. So also some huge news today for crypto. Ripple won its Ripple can't say Ripple today. Ripple won its court case with the SEC. And I've got the chart in front of me. It just went absolutely parabolic as expected. It's up around 75% to 81 cents as I'm recording this. So that's obviously good news for Ripple XRP. I don't invest in it, but for all those people that were holding it through these hard times, that was good. But also what this caused is all the other altcoins, and again, I don't speculate into altcoins, I just stick with Bitcoin and Ethereum. Only when we're going to have an altcoin season next, or the next altcoin rally after Bitcoin hits its next all-time high, then I might do some short-term trades. But I don't invest in these, because even if you make 10x return, then it's always followed by a 90% dump every single Bitcoin cycle. So also Cardano, Solana, and Matic, they're also the ones that just recently got sued by the SEC. They've rallied today, obviously on speculation that maybe they're going to win their case as well. Cardano up 20%, Solana 17%, and Matic 16%. And also, it was good news for gold and silver today as well. Silver hit $25 an ounce again. Also, gold is at $1,965 an ounce. So, you're probably wanting to know, is now the time to buy? Well, may surprise everyone, yes, it is time to buy. The reason for that is the Federal Reserve is lying. They're lying through their teeth, okay? And it's not so much that I'm bullish about the economy, because what you have to remember, stock market, gold, silver, cryptos, they're not the economy, okay? The economy is going to head into recession, but the unfortunate reality is Wall Street loves that, because then that means more free money for them. Now, something else huge that happened in the market, say we need to talk about, is in the bond market. Now, the 10-year US Treasury just the other day hit 4.07%. Now it has fallen 30 basis points. That means it's fallen 0.30%. That means the Federal Reserve, according to the bond market, is going to start cutting interest rates very, very soon. Now, there was a bit of a leak where Jerome Powell made a big boo-boo. He made a big mistake. When they were at their ECB summit, when he was with the Central Bank of Japan, the European Central Bank, and also the Bank of England, and he was doing an interview with CNBC, well, it was more of a panel, and she was really grilling them. Jerome Powell made a big mistake where she said, if inflation starts falling, again, this is their CPI rigged data, which I'll get over in a moment. If that starts falling, will you start cutting interest rates? And he accidentally said, well, look, if it's clear that inflation's going to fall to our 2% target, then we'll start cutting interest rates. Also, to keep the restrictive levels. So, for example, if inflation's 5% and they think they need to be at 7% to be restrictive, well, then if inflation falls to 2%, then maybe they'll drop interest rates to 4%. So I think the markets, they heard this slip, because then Jerome Powell quickly said, but no, we're going to crush inflation. We're going to hike interest rates another 2 times. Now, I do think they'll maybe do at least one more, but if they're, again, fake inflation data comes out to 2%, they are going to start cutting interest rate, everyone. And that's going to cause the US dollar to fall even more, which again could create more inflation, because if the US dollar falls, that means imports become more expensive. But at the end of the day, they are going to do whatever they can to try to prevent a real market crash. Me, when I do these predictions, I do it based on free market fundamentals, but we do not have a free market anymore, everyone. The data is 100% manipulated. And so you have to know the game they're playing and how to beat them at their game. So what I expect maybe one more rate hike from the Fed. I expect them to continue to slow QT, and they're not even saying this. This is happening in the quiet, on the down low, in silent. And I expect that these bank bailout facilities, while the middle class is struggling more than ever, while we're in a homeless crisis, why people can't afford to eat, pay their rent, the banks are going to continue to receive $100 billion, $200 billion every single week, okay? It's just unfortunately how the system works. And what I'm doing, I'm actually not going to be buying stocks, everyone. You know me. I'm going to be buying gold and silver. Why? Because I do think we're going to be facing a recession. Now, again, remember, recession, economy is not the same as the markets. So when a recession hits, gold and silver tends to surge. Also, gold and silver, they're some of the most undervalued assets in the world right now, with them still being below their levels they were in the 1980s when you adjust for inflation. Okay. Now, for more speculative part of my portfolio, it's majority of it is gold and silver. But before the more speculative part of my portfolio, I'm also going to be buying Bitcoin and going to be buying Ethereum. Now, the reason why I'm doing that besides stocks is because during a market melt-up, the risk-on assets, because that's what crypto is, it's a risk-on asset, okay, and it's a store of value, or at least Bitcoin is, those are the ones that are going to go up the most. And I think I could outperform the stock market by having my Bitcoin, but I can also get more safety, okay, by having gold and silver, because gold and silver is your safety net, okay, in case things really hit the fan, and Bitcoin is your speculative risk on play, okay, where you can make massive returns. You could easily make, right now we're around 30,000. I think it could easily, Bitcoin could go to 150,000 during the next bull run in 2024. There's going to be a halving event around April, May next year, and then Bitcoin will surge to new all-time highs. I'm calling it here now. Remember, I was a guy when Bitcoin was around 60,000. I was saying we're going to go below 20,000, may possibly hit 15,000, and we did hit that. I was hoping, hey, we'd hit 12,000, 10,000, but it didn't happen. So you need to pay attention to what the charts are saying, what the data is saying, and know when to get back in. Otherwise, you'll just be on the sidelines for the rest of your life, okay? So everyone, to confirm, market melt-up is in progress. The Federal Reserve is going to fail to stop real inflation, because remember, even though the CPI says 3%, the inflation rate, the inflation rate today using methodology they use in 80s is actually 12%. So going to lie, they're going to do everything they can to bail out the markets to keep this Ponzi scheme. It is a Ponzi scheme, everyone, going. It takes more and more people to keep on getting in. Okay, but what do you guys think? Let me know down below. I'm gonna miss the warm weather here at the Gold Coast. Michael Cowan signing out. You're awesome. I'll see you all in the next video.